More in business, India's equity benchmark indices dropped sharply in early trade before paring losses as global market turmoil rattled investor sentiment. Now, some Tata counters registering the sharpest intraday falls before paring losses. Despite market fears, officials from the Finance Ministry holding on to earlier GDP projections that set at a range of 6.3% to 6.8% for the current financial year, which started on the 1st of April. For more, Rebecca Bundhun joins us live from Mumbai. Rebecca, are Indian stocks approaching a bear market threshold following today's substantial decline? What's the outlook?
Well, at the moment, market analysts are very reluctant to try to even predict what is going to happen given the uncertainty in such a situation. But what they do say is, given this uncertain environment, investors are certainly likely to remain cautious, as we've seen this 3% drop in Indian stocks today, which is the biggest one-day decline in 10 months. And in terms of specific sectors, I mean, this is something that has been seen across all the major sectors in India. But Tata Motors, for example, saw a 10% drop in morning trade. It then recovered some of those losses, but still ended the day down more than 5%. Now, that is because its luxury brand, Jaguar Land Rover, is pausing the exports of its British-made cars to the United States because of these tariffs that have been imposed on it. Also, the IT sector really saw very sharp drops in trading today as well. Now, the IT sector has massive exposure to the United States. That's, in fact, its biggest market for its services. And Infosys, India's IT giant, saw its shares drop sharply, down more than 3% at the end of the day. Now, what analysts say is that how this tariff situation evolves will really dictate where markets go from here over the coming days, over the coming weeks. Indian officials, government officials, according to reports, are saying that they don't plan to retaliate at this stage, that really the focus is on working on this trade deal with the United States, which is currently underway in terms of talks and negotiations, and that's expected to be concluded later this year.
While the government is holding on to its GDP projections for this year, Rebecca, despite the turmoil, what's the word on the street about how growth is likely to pan out?
Yes, well, it seems that government officials, according to reports, are saying that India's GDP forecasts for this financial year between April and March remain unchanged, that predicted 6.3 to 6.8%. But analysts are saying it's a question of whether they'll be able to hold on to that as we see how this situation evolves and really what the impact is on India's GDP. There is still a lot of uncertainty, a lot of unknowns, and economists are really analysing very closely what the impact is going to be in terms of direct and indirect impact on India, the effects that are felt from the global economy as well. There's still a lot to really understand, and economists are downgrading, are reducing their forecasts for India. They're trimming their GDP forecasts by 0.2 to 0.4% in some cases because of these tariffs, but there is still a lot to really understand here. Now, markets and investors and everyone is really looking ahead to this week's rate decision from the RBI, India's central bank. That's due on Wednesday, and really sort of big expectations for a rate cut there, which would help to support domestic growth at a time when there is a lot of uncertainty, and it still remains to be seen what kind of impact these tariffs will have globally and on India.
Rebecca Bundhun there, reporting live from Mumbai. Thank you.